Welcome to the weekly Combo Update podcast, where I'll go over the action in the market for the week of June 23rd through the 27th, and we'll see how things look for the week of June 30th through July 3rd. First, going over the weekly update. The S&P 500, NASDAQ 100, and NYSE hit new record highs this past week, with the Dow up 3.8%, the NASDAQ was up 4.2%, the S&P up 3.4%, and small caps gained 3%. Growth sectors, including tech and semiconductors, are leading the charge, while defensive sectors are trailing. What were the key drivers? A ceasefire between Israel and Iran lifted geopolitical spirits. Mixed economic signals, including rising core PCE inflation but falling personal income and spending, kept things interesting, and optimism for a potential rate cut in September by the Fed. Low volume early in the week gave way to a volume spike on Friday, likely due to quarter-end rebalancing. Moving over to the intermarket analysis update, stocks are expensive, both historically and looking forward. The S&P's forward-looking PE ratio is at 21.9. The historical PE-10 ratio is at 37.65, far above the historical 16 to 17 median and mean. Mega caps are pricier than mid caps at 15.9, and small caps are at 15.2. Growth stocks are outpacing value, with the growth index hitting new highs and forming a recent golden cross. Copper's uptrend signals economic optimism, while oil dropped 12% to the mid-60s and gold fell 2.87%. Bonds, particularly high yield and corporate bonds, are in uptrends, supporting equities. Tech and semiconductors remain leaders, and utilities are mainly going sideways. Despite high valuations, broad market participation and momentum in growth sectors suggest the U.S. markets may keep rising. Switching over to the deep dive video, the S&P 500 is up 76.65% since the October 2022 low, and is 5.89% above its current 200-day moving average. This is strong but not overextended. The VIX is below 20, alongside declining volatility metrics including the MOVE Index, which measures the volatility of bonds, and the ULSR Index. This helps point to a more stable, bullish environment. Growth stocks are outperforming defensive sectors, and large caps are ahead of small caps. The NYSE Advanced Decline Line hit a new high this past week, and semiconductors are showing strength. The home builders are weak, and retail is lagging. Inflation concerns are low, with stable TIPS ratios and a positive 10-year to 2-year yield curve, but a near-inverted 10-year to 3-month yield curve and declining high-low momentum with the Advanced Decline Oscillator is giving some caution. Short and intermediate-term trends support more moves to the upside, but small caps and geopolitical risks bear watching. Moving over to the What to Watch update. The S&P 500's highs are backed by technical strength, golden crosses in the NYSE and NASDAQ 100, rising advanced decline lines, and positive smart money indicators. Bonds and low inflation expectations suggest a soft landing, meaning no recession. But concerns include below average volume, an overbought RSI, as well as other momentum indicators, and only 55.2% of S&P 500 stocks that are currently above their 200-day moving average. Long-term oscillators, including the TRIX and KST, are still negative, and the equal weight S&P 500 is lagging the weighted S&P 500. Key factors to monitor include employment data. The July 3rd report and rising continuing claims could signal labor market shifts. Volume trends. Expect an end-of-quarter spike on Monday. Yield curves. A slightly inverted 10-year to 3-month yield curve is not normal and raises recession risks. Sectors. Discretionary and retail are stabilizing but continue to lag. Semiconductors are key and are currently showing strength. Global markets. U.S. markets may regain leadership if the S&P to DAX ratio continues to rise. Emerging markets are in an uptrend. The dollar and oil. A weaker dollar is helping support equities, and lower oil prices are easing inflation fears. The big question that's being asked this week is, will the S&P 500 keep making new all-time highs? Positive seasonality and technicals favor gains in early July, but narrow participation and overbought signals call for caution. The second half of July typically underperforms the first half of July. Resilience amid geopolitical and tariff concerns does support a cautiously optimistic outlook. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.